Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TIGERMED interim report. Hangzhou TIGERMED Consulting Co. Limited offers a wide range of businesses and services across various segments. The company provides contract research organization, CRO, services through its clinical trial solutions and clinical-related and laboratory services segments. Some of the key services offered by Hangzhou TIGERMED include preclinical development services, medicinal chemistry, compound screening, DMPK, safety and toxicology, bioanalytical and formulation research and development clinical development services, medical writing, clinical monitoring, regulatory affairs, data management and statistical analysis, decentralized clinical trials, and more medical imaging, pharmacovigilance, medical translation, quality assurance, GMP and medical device consulting central laboratories, functional services, recruitment management, EDC cloud-based system, and remote follow-up center services post-marketing clinical research solutions. Site identification and selection, central monitoring, project team management, vendor management, and SAS project management patient recruitment, investment management, medical registration, pharmaceuticals and regulations consulting, drug safety, bioequivalence, and third-party training services overall. Hangzhou TIGERMED provides a comprehensive suite of services to support the development and commercialization of pharmaceutical products. TIGERMED's stock price surge, a year of strategic growth over the past 12 months. TIGERMED's HKG 3347 stock price has skyrocketed by a staggering 89.19%. Several key events have contributed to this remarkable growth. The company's strategic expansion and positive financial reporting have been major drivers, with new bookings increasing by 7.3% year-over-year and backlog of future contracted revenue rising by 12%. TIGERMED's aggressive acquisition strategy has also played a significant role, with the completion of several high-profile deals, including the acquisition of Japanese CRO Micron and Medical Edge. These partnerships have expanded the company's clinical operations in key markets. In addition, TIGERMED's regulatory achievements and innovation have been major contributors to its success. The company supported the FDA clearance of 2 groundbreaking AI-powered devices for essential tremor, further solidifying its position as a leader in the industry. Finally, TIGERMED's commitment to environmental, social, and governance (ESG) practices has earned it an MSCI ESG AAA rating, which can positively influence investor sentiment. While some financial reports indicated a decrease in total revenue and adjusted net profit for the full year 2024, the overall sentiment suggests that strategic expansions, acquisitions, new technology clearances, and strong new bookings/backlog have driven TIGERMED's significant stock price appreciation over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue decline. Industry cycles and structural changes led to a decline in CTS segment. Fierce domestic industry competition in China contributed to the decrease in laboratory services revenue. Revenue growth. Rapid expansion into new geographic regions, including Africa, drove growth. Increase in clients served by registration team and completion of more projects contributed to revenue growth. Diversified business demand from multinational pharmaceutical companies also fueled growth. Net income and profit margins decline. A result of increased competition and strategic missteps, the financial performance of a company has taken a hit with a significant decline in net income and profit margins. Net income decreased by 22.2% from RMB 492.8 million to RMB 383.3 million, while gross profit margins dropped by 9.6 percentage points from 39.7% to 30.1%. The net profit margin also suffered a decline of 2.9 percentage points from 14.7% to 11.8%. The reasons behind this downturn are attributed to increased competition and pricing pressure, which have led to a decrease in net income. Furthermore, the company's failure to effectively manage growth and execute strategies has resulted in reduced profit margins. These challenges highlight the need for the company to reassess its business model and adapt to the changing market landscape to regain its competitive edge. The company is indeed generating positive operating cash flow. The data from page 24 shows a significant increase in net cash generated from operating activities, rising by 130.4% to RMB 408.6 million in 2025 compared to RMB 177.3 million in 2024. This substantial growth indicates a strong improvement in the company's ability to generate cash from its core operations. The company's debt level and interest expenses have undergone significant changes over the past period. In terms of debt level, there are mixed signals. On one hand, short-term borrowings decreased by 99% on page 72, indicating a reduction in immediate financial obligations. However, long-term borrowings increased by 72% on the same page, suggesting a potential increase in future financial commitments. Additionally, bank credit facilities decreased from RMB 510 million to RMB 496 million on page 88. Regarding interest expenses, there is a clear trend of decrease. On pages 21 and 73, as well as page 91, interest expenses have significantly decreased, indicating that the company has managed to reduce its financial costs. The company's financial performance was mixed across various segments and regions in 2025. The clinical trial segment performed poorly, with revenue decreasing by over $167 million and gross profit declining by nearly $293 million compared to the previous year. In contrast, the clinical-related and solutions segment saw a slight increase in revenue, but its gross profit decreased by around $62 million. The laboratory services segment experienced a decrease in revenue, despite an increase in the previous year, while its gross profit declined by over $355 million. Geographically, Hangzhou was the only region with a net cash inflow of over $45 million. However, other regions' performance is not specified in the report. Overall, the company's domestic segment performed poorly, with revenue decreasing by over $172 million compared to 2024. The overseas segment also struggled, despite an increase in revenue, as it still lagged behind domestic revenue. Management is optimistic about the company's outlook, expecting domestic clinical operations business to recover and improve as legacy projects are cleared. Overseas growth will continue, driven by new orders in North America. To fund working capital requirements, management plans to utilize cash flow from operating activities and external financing at reasonable market rates. The company aims to expand its global presence through diversification of service offerings, collaborations with research institutions, and strategic acquisitions. Management also emphasizes the importance of enhancing services, technology, branding, sales, and marketing efforts to support growth. By strengthening its network and capabilities, the company plans to foster a biopharmaceutical R&D ecosystem and increase its competitiveness in key markets. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In the financial summary, it is noted that the company has paid dividends in the amount of $288 million, page 76. Additionally, the company has also engaged in share buyback activities, repurchasing shares for a total of $608 million, page 89. There are concerns about inventory buildup and supply chain disruption in the pharmaceutical industry. Shanghai Bioquick Pharmaceutical Co., Ltd's warehousing and transportation services initially increased, but then unexpectedly decreased by a significant amount. This fluctuation raises questions about the company's ability to manage its inventory effectively. Additionally, Hangzhou Leimai Medical Information Technology Co., Ltd's decrease in clinical trial technical services and laboratory services suggests potential disruptions in supply chain operations. These developments highlight the need for closer monitoring of inventory levels and supply chain management to mitigate potential risks. That concludes the financial summary for TIGERMED. Feel free to comment below, and I will be happy to answer them when possible.